just think it's being authentic and being yourself and being real and being kind and being human and all these things that people talk about today. But it's quite simple, really. Are you a trustworthy person? Do you go above and beyond even when the chips are down? I mean, I've had deals that went south, but I did everything under the sun to try to save those deals or hire attorneys at my own expense and try to, do everything I can. I think people know that.
Welcome to the How to Scale Commercial Real Estate Show. Whether you are an active or passive investor, we'll teach you how to scale your real estate investing business into something big.
Since 2007, Dave Van Horn has served as president and CEO of PPR Note Company. It's a holding company that manages several real estate and mortgage investment funds. Dave, welcome to the show.
Hey, how you doing, Sam?
I'm great, sir. And yourself?
I never had a bad day.
Wow, that's awesome. I love the positivity there, man. I don't hear that very often. I need more of you in my life. I've never had a bad day. Tell me this, Dave. There are 3 questions I ask every guest who comes on the show in 90 seconds or less. Can you tell me, where did you start? Where are you now, and how did you get there?
Where did I start? Well, I'm in Philadelphia, and I've been here my whole life. So I guess I started and ended here. I started as an agent back in 87 was I first licensed. And then I bought my first rental property, which was a duplex that I built some commercial garages on. And I bought that in 1989. So that's where I started. And I had gotten up to about 40. I had about 40 rentals. I was also, years ago, I've been investing like 35 years. So a lot of things happened in 35 years. But I had been a contractor. So I was a contractor for 22 years. I was a realtor, a property manager. I owned a title company, a lot of different things I did over the years. But I had accumulated quite a few properties. And then I managed a lot of properties for other investors as well. And that's pretty much it. But, just kept scaling that. And then eventually got into raising capital and started out raising capital for commercial real estate and then started raising capital for notes. That's how I met my partner. I used to run a real estate event, pre-meetup, pre all the technology you see today. It was real simple. We sat down, had a meal, got to know each other. And you could bring your deals. That was how simple the meeting was. But the meeting actually grew from 12 people at a lunch over a 6-year period. Ended up being in 5 states, 6 cities, from Baltimore to New York, and we had 8,000 people in our database. So it grew quite rapidly. This little have a meal and talk about real estate thing. So that's kind of how that network actually became, in a way, my bank. How I raised capital for other folks' deals, how I raised capital for myself, and even PPR today. If you think about it, we're we're kind of our own bank, so to speak, with our private equity, right? So
tell me about what does PPR do today for the listeners that may not already be familiar with you?
Well, we started out doing, believe it or not, delinquent second mortgages. And we started as investors. So it was somewhat of an accidental business. In fact, we used to have a short sale company, and that was the main business. And that went out of business, and the note company took off. So who knows, right? And then we went from from junior liens as we kept raising more and more capital and growing. We went into first mortgages, and then have morphed into commercial notes as well, and now back into commercial real estate again. So the company's grown and diversified quite a bit. Although we're relatively new to commercial real estate recently, I guess last year and a half, 2 years, we first started getting into short-term business loans, commercial loans, construction loans, bridge loans. We actually aggregate those up. We buy them, and we have an affiliate that does hard money lending and has an REO platform online that sells REO properties. And then we also finance that stuff as well. So that's just some of the things we do. And a lot of that we do to regulate capital. But still, the majority of our business is in the non-performing loan space. We do like the commercial real estate, though, because it gives us tax advantages, depreciation, things to offset the carried interest from our book of business in the loan side of our company.
You said the bulk of your business is non-performing loans?
Yes, I think last year we did about 325 million non-performing loans.
And what's your strategy there? Get them to be reperforming loans and then sell those off, or just reperforming and then hold them? Or?
Well, there's a couple strategies, but no. we have a JV partner. We acquire a lot of assets. They have a trade desk in New York, so we can access their desk and acquire assets. It's kind of like dollar cost averaging as you purchase. So it's kind of like this. We hurry up and purchase assets and aggregate them over time and get them, reperforming in a lot of cases. And then we go to securitization. So it's a kind of a race to securitization, so to speak. And that usually takes like 15 to 18 months. And then once we securitize, which is another way of saying refinancing a pool of mortgages down to a lower rate, we kind of de-risk our portfolio by doing that. And then we're off and running to wind down that fund. It takes about, I guess, 33 to 36 months is typical time frame there. And then you can turn around and you do it again. You go out and you aggregate more assets, and we use a combination of our private equity with some institutional capital, and that lowers our cost of capital by marrying the two together. And then
right, yeah, absolutely. Do you see any risks or I guess any stormy weather on the horizon in the non-performing loan space?
Oh, absolutely. So I'll give you an example. The first quarter of this year, we didn't purchase any NPLs. But although last week we just purchased $73 million. So, but that was intentional because of the market fluctuations and waiting for some things to settle down. But what we're seeing now is some things are loosening up right now. And you got to realize the last, 5 or 10 years almost, it's been an up market. So note prices are in direct correlation to real estate values. So the margins were actually thin. And then we tend to take off the most when it's a down market. So if there's, that's what's funny. Some people are like, well, what happens if there's a recession? Normally that's beneficial for us because that increases, foreclosures, things like that. But usually the biggest economic indicator for us is unemployment. The thing that's strange right now, where, we may see what we call a technical recession, where you have 2 quarters of negative GDP, but meanwhile, unemployment's still low, so it's never happened before. So that's what's different. Now, if unemployment was high, we would probably be high-fiving a little bit and going this, not that we wish bad luck on anybody, but it's just the nature of that business. What'll happen in a down market is assets just get cheaper pricing, wider margins. That's really what it means. We can make money in any market. What happens is your exits shift. The way you exit your deals, the way you work your deals. Perfect example of that is deed in lieu. Mm-hmm. So usually these are 1 to 4 family residential properties nationwide, right? So a deed in lieu is a good technique for an exit in an up market. It's not a good technique in a down market, right? Does that make sense? Because you wouldn't have enough equity to take the deed in lieu, right? So, so you can see how exits shift. That's just an easy example of that. And then when pricing shifts, or the loan to value and the equity that's back in these assets shift, the way you do your workout agreements or loan modifications, they could vary. So you just make adjustments, just like anything else in real estate, right? And you can make money in all markets. It's just you have to shift your strategy, right?
Yeah, absolutely. I mean, that's a lot. I would imagine a lot of people, processes, procedures, building the team around handling non-performing loans has probably been a work of art. Can you talk about that a little bit?
Yeah, it's funny you say that because for many years we were asset managers. We used to do a lot of that in-house, and there is a lot of compliance. But today we outsource a lot of that. So we're primarily capital allocators more so than asset managers. And our JV partners on the West Coast actually have, they have under 100 people. But you're right. If we did all that in-house, at some point, we would be a large firm like that. Whereas today we're at like 27 people and we have considerable AUM. We're just under 600 million under management. Now we recycle a lot of our money though. Right. So it's a little different than if I said I was in multifamily and I had, $1 billion worth of property. Usually that's with leverage or
sure.
But in our case, a lot of that private equity keeps moving and keeps turning. So it's a little bit different than that, where it's, I bought an asset and parked the money,
Right. Completely understand. As you rewind your 35-year real estate
and growing,
35,
30 something.
Yeah,
I can't count that. I can't count that far back.
Says the numbers guy in real estate. I can't count that far back. Tell me this, Dave. What's one mistake that you can look back on that you said, man, I wish I hadn't done that you could help our listeners avoid?
Wish I hadn't done that. Well, a lot of it is knowing who you're doing business with is definitely one, because we've all had scenarios that didn't work out or lost money or whatever, bad partner. But I think the opportunity thing would be about leverage, about utilizing leverage sooner. And, I have a lot of coaches and mentors, and that's one of the things that's a common theme with some of the coaches and mentors I've had, where they'll ask the same question, which is, what's the one thing that you can leverage that'll catapult you or your business in the next 6 to 12 months? And that's an interesting question that I paid a lot of money to have asked of me. But it was good money. But the question sometimes would stay the same, and you go back with my coach 6 months later and he's asking me the same question. But things change, right? I could leverage technology. I could leverage people. I could leverage a lot of things, a JV partner. I could leverage capital. And that number one thing will shift for people based on where they're at with their business or their personal life. Oh, your personal life could be something else. What's the one thing? It's almost like the book, The One Thing. What's the one thing that I can do such that by doing everything else, everything else becomes easier or unnecessary? That, who's that? Gary Keller, right? So, yeah. It's a great point, great book. The other thing is, what's the one thing? What's the one goal? And by that, I mean, I was a very ADHD type guy where I had shiny object syndrome, like a lot of real estate investors, and control freak and, all those things. But a friend of mine used to say this, there's one goal in life, and that is to get as much passive income as quickly as possible by retirement age at the latest, and to have as much tax deferred or tax-free as you can. It's an interesting goal, right? It doesn't really reflect your passion or what you're good at, but it does kind of sum it all up in a way, because that's what we're all trying to get to with, financial freedom or whatever that is, to get freedom of time, to get freedom to be able to go where you want, when you want, with who you want. Because ultimately that's probably the bigger success. Now that could be different things for different people, but you get the idea.
Gotcha. So if I hear you correctly, are you saying that maybe earlier on you would have defined, I guess, the one thing that you said, hey, it paid more attention earlier on to this is what will move my business forward. And then also the other thing I'm hearing is that, hey, earlier on I would have said, look, I'm going to really hyper focus on creating as much passive income as I can. Does that sound about right? Yes.
And not 21 things, right? That's why. And then the other thing is like being willing to have utilized more leverage sooner. Like, I'll give you an example of that. Was I used to sell 75, 80 homes a year when I was a RE/MAX agent to fellow real estate investors.
Right.
And looking back, I go, well, that was dumb. I had the capital. I had the hard money lenders. I was like reluctant to use hard money because I thought it was too expensive. In reality, what did it cost me to give away 75, 80 deals? I was focused on the wrong thing. I'm focused on commission. I'm not focused on building wealth or cash flow. Like, I was focused on commission. Think about that. That's ridiculous almost. And most people can't find 75, 80 deals. I'm selling them to other people. And I'm going, well, I'm not thinking about, I could have bought all of them. I should have been buying 75, 80 houses a year myself.
Right.
That's a perfect example of me, like, can't see the forest from the trees kind of thing. It was all right in front of me. I had all the resources because we don't, what's that saying? Tony Robbins used to say, we don't lack resources. We lack,
creativity.
Yeah. It's just, it was all right there in front of me. And, sometimes we just don't see that,
It's funny you say that. I'm not quite to the same extent of as painful of a lesson, but I go back to when I started in real estate and all the houses I flipped. I mean, dozens and dozens and dozens. It's like, oh, why did I not just hold those again? Like, here I am 10 years later. I'm like, I'm an idiot. I should have just bought them and held them. I was buying them, right? Same idea. Same exact idea. That's that's great. Thank you for sharing that. I certainly appreciate that. Tell me this, what's one thing you feel like you've done really well? Something you said, man, this has been a key to success that I feel like other people should be implementing.
For me, I was always a sales guy, and it was, my unique ability is the ability to raise a lot of capital, a lot of equity very quickly. I've had cases where I raised $30 million in a month, which is significant, right? And a lot of people can't really do that. But a lot of that, where that comes from, I think, is probably from trust over a long period of time. So you're able to be able to connect with people, feel, you're authentic. It's just like having a large network, but it's more than having a large network, right? Because you could buy a network. But if you have an organic network, and the other thing is, like, the more you give, the more you get, for sure. And I just think it's being authentic and being yourself and being real and being kind and being human and all these things that people talk about today. But it's quite simple, really. Are you trustworthy person? Do you go above and beyond, even when the chips are down? I mean, I've had deals that went south, but I did everything under the sun to try to save those deals, or hire attorneys at my own expense and try to, do everything I can. And I think people know that. They know that I'm going to treat their capital like it's my own, or I'm going to go above and beyond to make sure everything's above board and can have a favorable outcome. Now, things can happen, but I think a lot of it's how you handle it and how you communicate and things like that.
Excellent. Appreciate that. Tell me this, when you look to the future and you say, hey, in 5 years, this is where I want my companies to be. This is where I want to be. What does that look like?
Well, I might be retired in 5 No, that retirement's a funny word. I don't see me stopping, like in the traditional sense. Let's leave it at that. But no, I think my company, we already know, we already have a 10-year vision and things like that. In 5 years, we'll be at about $3 billion under management. We'll probably be at around $1 billion in private equity. And then hopefully we can do a lot of good as well along the way. So, we do a lot of things to try to impact the community, whether it's affordable housing type things and other programs that we're working on. So hopefully we will be able to give back more and take care of all the stakeholders, our staff, our investors, and help others build wealth. Really, it's that whole share, build, and preserve wealth concept.
Right. No, I like that. Dave, here's a question for you. When it comes to scaling or starting out, or somebody that's saying, hey, look, and the name of the show is How to Scale Commercial Real Estate. So the idea, is that somebody's going, I really want to grow into commercial assets. What's one piece of advice you would give to somebody if they said, hey, I'm ready to go large. How do I do it? And they came to you. What would you say?
Well, for one is you got to learn what you're doing to a point. So one of the things I did was I shadowed other people doing it. So when I first started raising capital, I actually went to work for a company in New Jersey, and they hired me to help raise capital. But I learned a lot from them about not only raising capital, but commercial real estate, because that was what the money was being used for. So you don't necessarily have to do everything yourself. You can shadow or mentor with someone who's already doing it, which makes a lot more sense than trying to go out and be the trailblazer or the first person with arrows in your back, so to speak. Right. I think you can, success leaves clues. You can learn a lot from people that are really successful at doing it. And if it's an area that you're not familiar with, build a team that is. I know the one outfit that I worked for, they were doing mobile home parks, and they had never done them before. And they were doing storage as well. And but they brought a crackerjack team together. They had people on their board. I mean, the one guy was a mobile home developer for the last 35 years, that kind of thing. Same way with their attorney and their accountant were well-versed in these areas, right? So they brought in experts. They also had a management company that was, around forever. They also had a commercial broker who just specialized in mobile home parks in the Midwest. It was like, they didn't just go, oh, well, we don't know what we're doing and we're going to wing it. It was a lot more than that. They went out and built a team that did, even though they didn't necessarily have all the skills. But most of these are commercial real estate, especially, it's a team sport. You're not going to be good at everything anyway. And if you think you are, that's another problem, I think. But we all like to think we're great at everything, but I know I'm not, right? I know I'm not an excellent underwriter. Does that mean I don't know anything about commercial real estate? No, I absolutely do. But there's people that like to sit in Excel all day and play around. That's not me, right? But that guy that's playing with Excel probably can't raise the capital either, right? So it's a team sport, just like property management. That's its own thing, right? Just like construction management, that's its own thing. Because I've built a lot of stuff, and when I was a contractor, a lot of our customers had 400 to 600 units, and we used to do the monthly turnovers, right? So I do have a strong sense of what that takes to turn over X number of units each month and things like that. So they're all different skill sets. They're all different things, and it is a team sport. It's just figure out what you're good at and bring in the folks that are good at the other parts. Some people are great at operations, right? Some people are great at managing people. Just because not all leaders are managers, right? So
yeah, it sounds like you said, build the team around you. Find the people that are really good at what it is that you're not, and build them around you. And that's that's critical. You mentioned a lot of things I'm not good at. Underwriting, man, that's a tough one. That's I don't know, like I'm just not great at it. So that's really, really cool. Dave, I thank you for coming on the show today. Is there any last last piece of advice you'd like to share here with the listeners before we sign off?
Piece of advice? Don't be afraid to get started, but I think a lot of it has to do with it's always the same things. It's the sources of deals, it's the capital, it's the people, right? So it's networking. I think all those things help put the elements together, and don't be afraid to do it. I mean, commercial's just bigger numbers, right? Don't let that, I'm very comfortable doing commercial deals. It doesn't even faze me. I know a lot of people get nervous at that, but I think there's actually some advantages to it. The larger the loans get, when I was telling some of the people on my team that were newer, they were a little rambunctious about, hey, we're getting into commercial, it's bigger deals. But I go, hey, guys, there's a professional appraisal done. There's a bank that's doing a lot more due diligence than us on this asset, right? Because they wouldn't want to do that loan otherwise, right? So there's other parties that can help out in some of these areas that give you a better comfort level, so that, we don't have to be, like you said, experts in everything. There's other people that are coming along for the ride with us, whether it's our real estate broker, our lender, our title company, all these different things, they're there. If it was that crazy, they wouldn't do the loan, right? To a point, right? So
that's awesome. Thank you, Dave, for sharing. Certainly appreciate you coming on the podcast today. It was an honor and privilege to have you on here. If our listeners want to get in touch with you or your PPR note company, what is the best way to do that?
Probably the best way is pprnoco.com. You can definitely sign up. We have all kinds of resources on there, and definitely reach out to me. I'm also on Bigger Pockets and LinkedIn. I have a distressed mortgages group on LinkedIn. You can seek me out there. On Bigger Pockets, we answer a lot of questions in the forum. So anytime somebody has something, we're glad to help out.
Awesome. Dave, thank you so much. Certainly appreciate it.
My pleasure.